The CFTC regulates futures and swaps, events and other things. Swaps are considered, event contracts are considered swaps. So the CFTC was deeply involved in this issue. The CFTC tried to prohibit event contracts on elections. And there was litigation on that topic, and ultimately the event contract prediction market prevailed in court, and the CFTC dropped that case. So now you have really a rapid growth in prediction markets, as you noted, right? It started with elections, and we saw it in the 2020 elections.
And that was what, Kalshi? It started with Kalshi, and now you've got Polymarket and all different kinds of companies coming in with it.
Yes, and there are a number that self-certify almost every day with the CFTC to join the space. And now you see the next frontier, as you noted, is in sports. And so we've seen a lot of the big prediction markets offer event contracts on games, including individual performances. And you mentioned the article that I wrote. You know, we talk a lot about the explosion of prediction markets and how it's so entertaining and it's fun. You can take out a contract on almost anything, what we say on this broadcast, for example. But you can also predict or bet, when it's sports betting, on individual performances. And that's where we've seen some of the risks. A few weeks ago, there was a big case out of the Eastern District of New York involving prominent NBA players and affiliates for inappropriate gambling on performances. And just yesterday, in a similar case out of the same office, and these are just allegations, by the way, they haven't been proven yet, there were charges that two major league pitchers manipulated their performance in order to win on specific sports bets.
Insane.
And like, you look at some things, Matt and I were looking at this right before the Nobel Peace Prize winner was announced on Polymarket. All of a sudden you saw the contracts picking up for the eventual winner even before she was announced. So it's not even just sports, you see it kind of in all these different corners. What can and should be done to make sure that bad actors can't do things like that?
So that's a great example, and it's one that got a lot of publicity. I think it shows a few things. One, these markets are very transparent, right? Folks picked up on that very, very quickly because the markets are watched closely. In the Major League Baseball case that I just discussed, analytics apparently caught some of the bets as being anomalous, and it was elevated up. But I think, you know, when I look at different markets, right, I was a federal prosecutor for about 10 years, the head of enforcement at the CFTC. Every asset class has the same risks, whether you're talking equity markets, sports markets, crypto, right? There's risks from insider trading, as you mentioned, right? People sharing information or taking information that doesn't belong to them and passing them on to someone else. So in this article, we talk about a lot of common sense, everyday bread and butter compliance solutions. And those include, you know, what you might imagine, right? Training. But when you talk about prediction markets and sports and betting on anything, whether it's sports, Hollywood awards, a whole new class of people need to be trained and steeped in these concepts, where if you are, and a lot of the prediction markets, by the way, have included this in their policies, they have a hard ban, where if you are a participant in a committee or in a game, you are prohibited from participating in the event contract on it. And that is smart. Training. Awareness, right? I think Charles Barkley, when he was talking about the NBA indictment, said, well, everyone knows, you know, that this conduct is prohibited. But I think there needs to be greater awareness, as these cases show.
Does the current CFTC, you know, or do regulatory bodies now have sufficient understanding of the types of liability that these markets can be susceptible to, do you think?
Well, the CFTC has always regulated designated contract markets, which is what prediction markets are, right? And so there is a core competency in that. These are new markets, though. In terms of sports, they've really only grown over the last 10 or so months. So there's always, from an institutional perspective, there's always going to be a learning in terms of getting expertise.
Right, and nobody at the CFT is running analytics of, you know, fastballs, right?
Probably not.
Not yet.
I'd say that's fair. Not yet. Yeah, I would have if I was still there.
Sounds like
fun.
A good time. I was going to say, okay, but so this is one risk, right? Insider trading. The other one is just like the riskiness of this. This idea that an everyday person could bet, I don't know, like liquidate their 401k and bet it on how many times the Chipotle CEO is going to say carne asada in their earnings call feels kind of crazy. What do you do just about like the very large risk and very, gambling aspects that there are to some of these prediction markets?
Well, you have to. It starts with having awareness and strong policies and procedures. And then, there are enforcement cases, right? Now, I would bet after, no pun intended, after these recent indictments that have come down, it has raised a lot of awareness about the risks of participating in these markets. And so anytime that there is an enforcement case or an indictment, as a prosecutor and a regulator, you are thinking not only about the individual case, although that is your biggest concern, but also the deterrent value of the matter. So as you see problems, and if there are cases, if the facts and circumstances support that, I think that will deter misconduct.
But you're not making, it's important to point out, you're not really making a moral argument about gambling in your piece.
No, the point of the piece from my background is I've looked at markets, equity, crypto, sports betting markets. All markets have similar risks, right? This is a new market. And so people should be aware of those risks. And then companies and firms entering it should take precautions because there is liability, right? The prediction markets are now registered with the CFTC. When you are registered with the CFTC, you have obligations because it is a regulator, right? You have to make sure your contracts are not susceptible to manipulation. Make sure there's no abusive trading. So those are obligations. And by the way, if you fail to comply with those obligations, there is liability not to the person placing the contract position, but to the organization. And so that was the point of the article.
But what happens when you have like one of the betting markets being like Truth Social, of the president and his company getting into it too? Surely that influences regulators on just how forceful they might be with some of this.
Well, I can't speak to that particular market, but I'll say it shows how much prediction markets have grown with time. And you mentioned the Bernstein report about saying it is a permanent asset class, or going to be. And I think you see it now in almost everything we do. And you see why it has grown. I watched the election returns last week. And you watch the news, but then you also watch the prediction markets. And if you followed the prediction markets, similar to the 2020 presidential election, they were calling the favorites, not calling, but they were showing the favorites for a much earlier time than traditional sources.